My two Satoshis, this is my two Satoshis. Tune in and get the latest and greatest. I'm stacking Toshis,
Yeah, it's your boy Crypto Blood. Welcome to another episode of My Two Satoshis. It is November 13th, 2020, and I gotta give a shout out to, once again, my main man, Wired Sparks, for the song request, Right Wrist, by an artist named Primo Rice. Never heard this one. He's always putting me up on the new stuff, guys. Thanks everyone for tuning in, and again, welcome to another episode. Today, we are going to be looking at something you probably didn't even know about. There was a huge bug on Ethereum the other day that actually caused a hard fork. They did the upgrade on the low, trying to be secretive to patch a security issue they didn't want a lot of attention on. All right, so we're going to take a look at this and we'll see what happened. What does this mean? This is what I mean by, we say we want decentralization, but at some point there has to be a balance, right? Because if this bug had appeared in a scenario where Ethereum was fully decentralized, it may have been catastrophic. So we're going to take a look at what happened to Ethereum and its unannounced hard fork. It actually had a hard fork. So we're going to review that article out of CoinDesk here in a second. I also got one from the block that's talking about TORNADO.CASH. Shout out to my man 10 Pound for recommending TORNADO.CASH many months ago. It's a mixer or tumbler website for those of you who want to break that chain of surveillance with your funds. You can use what's called a mixer or a tumbler to do that. TORNADO.CASH has been around for a while and is a good one. They just hit a milestone. I think they hit over $13 million in privacy pool value. I'll talk about that one here. That's important in crypto still. I know we're getting away from that, but we got to keep true to our roots when it comes to crypto, right? So we'll talk about that. And also we've got out of Cointelegraph, the BIS, that is the Bank of International Settlements, says that physical cash is still important even as CBDCs take over. I was interested in this article just from the headline. We'll take a look at it together on this episode of My Two Satoshis. Let's get it. If you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. And I gotta give a shout out to one of my sponsors for the channel. We've got a partnership with Dudex. They are now hosting my algorithm trading service. So get over there, sign up. You'll get an extra $70. And in addition to that, depending on how much you deposit, you'll also get my algorithm for free. So I have a link in the description below for you to sign up. Email me once you sign up, and I'll send you instructions on how you can sign up for my service for free for a month. Automated service. It trades Bitcoin versus USDT and Ethereum versus USDT. So check it out. Link in the description below for that. As far as we've got with Bitcoin, guys, I told you the other day, I don't know when you're going to start listening to Crypto Blood. I told you it's clear skies until all-time highs. You like how that rhymes, right? But seriously, I don't see any resistance really for us until we get to $20,000 Bitcoin. What's going to happen at that point? I have no clue. But we're sitting at around 16,300 right now. So, hey, we've got some room to head higher. If I draw out the trend lines for us again, you'll see what I have on the table for us. And then from there, we can do one more extension upward like this. So we may see a pullback to 16,000. I'm going to zoom in a little bit for you. 16,000 could be a pullback area. If we break this trend line right here, the next one is down here at 15,000. All right, that would be an excellent area for you to get in if you're too hesitant to get in at these types of levels. But I personally think we're going to have a scenario where we just do this. We head higher like that, all the way up to 20,000. There is a slight possibility that we see some resistance at 17,000. As you guys can see here, 17,100 area. There could be a slight area of resistance there. I highly doubt it. I'm gonna be honest with you. I think we're going for that almighty 19,994 bucks, 90 something like that. You know what I'm saying? $20,000 Bitcoin basically is where we're going. So hope you guys enjoy the ride. So let's take a look at the heat map. We've got Bitcoin up, barely changed, to be honest with you, $16,183. Ethereum up 2.8%. But look at Litecoin. That is going ham right now, up 9% on the day. $65 77 cents. EOS going kind of crazy as well, up 5.8% today, making a little comeback. And so unlike yesterday, we got a lot of the alts taking green days today, and Bitcoin kind of just settling down. Probably some profit taking and rotation into other altcoins from Bitcoin so far. That's my opinion on it. So I want to highlight this milestone that Tornado.CASH has just hit. $13 million in privacy pool value, hitting an all-time high. It says the USD value of Ethereum-based mixer Tornado.CASH privacy pool has logged an all-time high, peaking at over 13 million. That was just a couple of days ago, according to data compiled by the block. So it definitely looks like they're heading for that $15 million marker. The non-custodial privacy service has experienced a 7,700% growth year to date, from $174,000 to $13.4 million. Tornado.CASH has been active since August of 2019 and has 4 different mixer types, contracts supporting Ethereum, DAI, CDAI, and USDC. The service is used to protect a user's identity by shielding the link between their withdrawal address and the one they use to deposit their assets. So that's great. I wanted to just highlight that because I want you guys to be aware of some of the things you can leverage with cryptocurrencies, not just, trading it and buying it on centralized exchanges like PayPal's new one, or even Coinbase, or any of these centralized exchanges. Create that anonymity for yourself, purchase these coins, mix them up, and then send them to an external wallet. That is a leverage. That is the power in this crypto space. Use it to your advantage. It has nothing to do with hiding illegal things. You should have privacy. It's your right to have privacy. I don't care what country you're in. That's the beauty of cryptocurrencies. I could be in a country like Russia or anywhere else that really doesn't like privacy and mix my coins and have my privacy and take control of that back. So I want you to guys definitely check out Tornado.CASH. I'll try to remember to leave a link in the description below. But this is why you come to Crypto Blood's channel. It's not for all the nonsense shilling and this and this and that. If you want to know the real deal, what's going on in the crypto markets and what tools to use, come to CBTV and get that information. Make sure you guys hit that thumbs up for me as well. I had a couple of people say that they weren't getting my alerts for my video. YouTube does that many times. So make sure if you're subscribed to my channel, click the bell right next to the subscription button to make sure you're alerted every time a video is posted. But anyhow, let's go ahead and move on to the next article, which is about Ethereum. Real sneaky on the low. I don't know if you guys heard about this, but it was kept under wraps. And I actually ran into some issues the other day trying to withdraw cash from an exchange that I trade on. It wasn't Dudex, it was actually Bityard. The funds never showed up, so I had to contact support, and they helped me with that. And now that I look back, it's probably because of this situation. So essentially what happened, guys, is that the bulk of Ethereum's DeFi ecosystem went dark earlier today, or yesterday I should say, after a latent bug in the Ethereum code split the network's transaction history in two, which is essentially a hard fork. The split resulted from a code change that was surreptitiously inserted into a previous Geth update. Some Ethereum node operators ignored the update, which ironically was meant to prevent the very split or hard fork that occurred. The nodes that did not upgrade were under the impression that the update was minor and did not know it included a change to Ethereum's consensus design, which is huge. And so the issue was first apparent on Infra, which is a consensus run server that keeps a majority of the decentralized finance applications synced to the Ethereum network. That went down around 800 UTC on Wednesday, and with it, some of Ethereum's most popular applications like MetaMask, MakerDAO, Uniswap, Compound, and MyCrypto, among others. Shortly after, Binance halted Ethereum trading after noticing conflicting transactions on its Ethereum node. So the crazy thing is, which is to me the most important thing we need to take from this, is that really technically it was an unannounced hard fork. Something similar happened to Bitcoin 7 years ago when there was a database upgrade. This one developer says. He also goes on to say, in my opinion, today's consensus failure in Ethereum shouldn't be underestimated, and should be considered as the most serious issue Ethereum has faced since the DAO debacle back 4 years ago. An investigation is in order. So many of the node providers, guys, thought this was a minor change to code, but again, to me, this only illustrates, Ethereum's not decentralized. Okay, if you can have one organization do an upgrade, and not only do an upgrade, but not even really tell you that they're doing an upgrade, that's not decentralized at all. At all. So anyone who thinks, one blockchain is more decentralized than another, forget about it. Because again, if this would have happened, if Ethereum was fully decentralized, first, it would just cause so much chaos. Secondly, doesn't mean it's the end of the world, but it would take a lot more time for everyone to upgrade and get on the same page and know what's going on. That's why you have these concentration of nodes that you run through. That is the centralized aspect of Ethereum and many other blockchains. Being fully decentralized to me is a myth. It's not something you want. You have to have, it's a scale. I always used to talk about this. Decentralization, it's a gradient scale. So, I hear people talking about, or the one article I read about Cardano eventually getting to 100% decentralization. Personally, I would never want that. And here's another tweet from Matt Corallo. According to this situation, not only did ETH have one of the worst bugs ever, but the devs botched the disclosure of it and didn't even mention it to likely the largest operator of ETH full nodes. Yikes. Let me know your thoughts about that in the comments below. Be careful out there. This is all still an experiment. I want to talk to you guys about the BIS. That is the Bank of International Settlements. Guess what they're saying? Physical cash is still a very important aspect of the monetary system, even as CBDCs take over. Let's look into what and why they're saying this. So Benoît Cœuré, who is from the Bank of International Settlements, said that in the euro area, unlike Sweden or China, demand for banknotes is still strong. He goes on to say their role is declining as a means of payment, but they remain a means of savings. No one wants to force consumers to choose their payment methods. Diversity is a good thing and it fosters innovation. The goal is to offer choice, which means allowing consumers to continue paying with currency issued by the central bank. And the article goes on to talk about CBDCs essentially hold the potential for removing physical cash altogether, a positive or negative outcome depending on one's view. Contingent on the country, some regions such as the US operate largely digitally already. A CBDC would mean a blockchain-based solution. It could also involve banking with the Federal Reserve instead of commercial banks based on the route the US takes. And this is an important part, and I said this, if they roll out CBDCs here in the United States, it pretty much eliminates commercial banks, because now, and really kind of eliminates the central banks around the country, because now issuance will come directly from the US, probably the Treasury, and physical locations will be something like the USPS and other avenues for you to, set up a digital wallet and start receiving digital currency. So this is a big issue and a big shakeup to the structure of the banking system here in America, at least. I don't know about other countries, but this is something to think about, guys. As a consumer, you'll be marginalized to use digital currency. You look already right now, which I thought personally was illegal. From my understanding, it is. I've seen areas in San Francisco, even when I was in New York a couple of years ago on business, they weren't accepting cash. And I'm sitting there thinking, like, isn't that illegal? I thought you had to accept legal tender, which is this Federal Reserve note that we hold. I don't know. Maybe I'm missing something. Someone let me know in the comments below. Is it illegal for businesses to not accept your legal tender cash, your physical $20, $50, $100 bills? Is that illegal? I think so. Let me know if I'm wrong on that. And to just piggyback off of that, it looks like the Bank of England won't protect private banks from a digital euro. Quote unquote, they said our job is not to protect bank business models. So it looks like banks aren't really up to or like this concept of CBDC. So they're like, hey, I don't want to insure that. That's up to you. You handle it. And that is kind of a strike against CBDCs for commercial banks. The deputy governor of the Bank of England also went on to say banks will have to adjust Our job is to ensure that if bank business models change, we manage the financial and macroeconomic consequences of that. Some banks have warned as central bank digital currencies are implemented globally, they could have adverse effects on commercial banks, depriving them of stable sources of funding. So this is interesting, guys. Just wanted to give you a heads up on that. Keep that in the back of your mind as these CBDCs start rolling out. They will. They already are in China. U.S. will have one soon as well. It's going to change the climate and landscape for commercial banks. We already see commercial branches closing left and right already. So this may be the death blow. What does that look like? What does the climate look like without commercial banks? Is that good for us? Is it bad, or is it indifferent? Let me know in the comments below. But that's pretty much it for today. Ladies and gents, shout out to my man, Wire Sparks, a premium YouTube member, for the song request, Primo Rice, Right Wrist. If you found this video informative, make sure you guys like, share, and subscribe, and click that bell to receive more videos like this. I'm out of here. Holla!